Hi, everybody. Welcome to Talking Automotive with Mark and John. My name is John Sinclair, and my co-host, Mark Palavestra.
Hi, John. Today we're reviewing our first 20 podcasts that we've covered off, but also putting it all together. So what does it all mean and where do we go to from here? And we start off with some of the background information, the COVID-19 impact, but some of the bigger trends going forward and the action plans around that.
Yeah, Mark, I think this year has been a very interesting year. I think there's been some fundamental changes in the way the business is approached. And so it's quite good to review and just have a look at what things are happening in the market and then try and make some sort of predictions of what's going forward. So it's an interesting discussion. Looking forward to chatting to you about it.
Let's get into it. With 30 years' experience in auto logistics and state-of-the-art locations in 5 major Australian cities, Precar Fleet Services is an independent division of Precar Services, offering specialty fleet fit-outs for commercial applications ranging from simple tray and tow bar fitments to fully bespoke service body and accessory installation. With quality-assured safety, compliance and standardisation of vehicle builds, Precar Fleet Services are a premier all-in-one solutions provider for commercial vehicle fleet operators, leasing companies, and original equipment manufacturers. For further information on how Precar Fleet Services can assist in solving your commercial vehicle fit-out needs, please visit precar.com.au and click on the link to Fleet Services.
Okay, so Mark, this year has been a very fascinating year. We've had COVID come in, but the industry was going through some sort of tough processes even before COVID. Can you maybe just take us briefly through some of those things and just remind us of what was happening at the time before COVID hit?
You're spot on, John. The industry's been going through significant change, and the last 2 years, 2017 was the last full year of increase in volume year on year, so over the 1.1 million new car market. And it was interesting, whilst all that was happening, used cars were struggling. So residual values and used car prices were under pressure as a lot of brands there was a lot of competition, lots of brands in this country, 60 passenger car brands, pushing a lot of product into a market where there's 25 million people, and it was a 1.1 million new car market. So when you look at those pressures pushing and also a favourable exchange rate up until that point, but the exchange rate started going south, which meant cost pressures started going up for new cars, but we didn't see that in the actual price of cars. So that meant there was a massive margin squeeze for OEMs and also dealers in order to achieve their volume targets. So what that meant was we saw dealer profitability plummeting to below 1% net profit to sales, and close to 30% of dealers were actually losing money. So new car volumes dropped from 2017 onwards, pretty much 24 months straight. Just before COVID hit. At that time, used car pressure was significant. Now, a lot of new car stock in the Australian compounds because every brand was driving to achieve more share. So the compounds were full of cars. What we saw is this pre-reporting situation was rampant because there was so much pressure on the local sales companies to report back to the overseas masters a favourable result. So there was a lot of pressure to pre-report cars. And we saw the VACC did a great job by surveying their dealers, and the data that they returned was that there was 28% of cars sold were actually pre-reported. So that's almost 1/3 of all new car sales were actually pre-reported. When you look at that, that's around 200,000 or over 200,000 cars a year that actually sold as pre-reported. So they're used cars. And we saw the trend for Gen Y not to actually buy cars. So John, back in your day, my day, I could grab your license, you can grab mine, and the expiry date would be very close to your birth date because you got your license as soon as you're able to. Now you don't need to. You've got social connectivity via social media, and also you've got other people driving you around. So the need to buy a car or even drive a car is actually not as attractive. This is leading up pre-COVID. So Gen Y were very much about using public transport and ride share, and this whole share economy was actually getting a lot of traction and momentum. So they're not inclined to own cars. And we also saw Holden in its final stages of existence in Australia. So a lot of pressure to move inventory, a lot of high volume commitments with factories factories, that they had to move stock, and that put a lot of pressure on pricing across the board, where there was a lot of aggressive trading with the brand struggling to survive. Once again, there's pressure from the overseas head offices to push stock into Australia, because every OEM sees Australia as a fertile market. The economy was very strong, 30 years between recessions, so it was always seen as a market that you had to be in and you needed to get your fair share out of. Then we had the changes with the Banking Royal Commission and the impacts of the F&I changes, where it became very difficult to actually get finance for a car. If you think of the lead up to the COVID situation, there was already serious headwinds in play. So what were very buoyant years from 14 to 17 suddenly changed because you had a credit issue where you couldn't actually get access to fund a new car, and therefore there was the discounting in order to get people in or miss out on selling cars. And then there was the leakage to compound it from a new car perspective, still the leakage from the service business going into the aftermarket area. And the aftermarket area is a very, very profitable and sustainable business. So we've seen a lot of leakage into that aftermarket space, where those providers are very active and they're looking after the car park. Because when we looked at the data from Potentiate and how long people keep their cars, average cars over 10 years old, average new cars kept almost 8 years for a private buyer. So these people are spending their service money in the aftermarket. And the other element is the crash avoidance technology is actually lowering the crash parts for new vehicles. So there are less crashes, therefore there's less panel sales, etc. for those vehicles. So that's also impacted the profitability for a lot of new car and new vehicles, where there's less accidents with those vehicles. So crash avoidance technology, great news from a safety perspective, but actually impacting the parts sales side of things.
Yeah, Mark, I think definitely it's been a very tough situation for automotive the last 2-3 years, both for OEMs and for the dealers. You can see it coming through in the dealer profitability figures. Profitability definitely coming down. A lot of pressure from both OEMs putting on dealers to try and drive sales, and also dealers just on their staff and that, trying to get stock and trying to maintain that profitability. So very tough time. And then now we had COVID. Now, when we originally spoke, we made quite a lot of assumptions, and I think we've started to see quite a few of those assumptions come through. The expectation was it was going to be quite tough under COVID, but we've seen a lot of positives in that. Can you maybe just take us through some of those, what have been some of those impacts, and what were the positives and what were the negatives out of the COVID hit?
Absolutely, John. Well, it's interesting. We always maintained there'd be a positive spike to this recession. And at the darkest of dark times was April, when we did our first podcast, and the world was falling off the edge of a cliff. So we always said that there was going to be an issue. And now if you look at the key drivers to what the issues were pre-COVID, were lots of supply and demand less than supply. So if demand is less than supply, this is the fundamentals of Economics 101. When demand is lower than supply, prices drop. When demand is greater than supply, prices increase. And this is what we've seen with COVID. And it's interesting, the transaction prices have actually gone up. What we've seen is, the trend to avoid public transport or rideshare in preference for self-transport. And also there's the cash injection from the government JobKeeper and Seeker. So there was money going into the economy. Now you're injecting money into the economy. You then also throw extra money in with access to super. So a lot of people had access to their $10,000 pre-June, and then there's another $10,000 post-June to buy something. Now some of that money is going into gambling. A lot of it's gone into buying a sub $10,000 car because they weren't previously going to drive a car, and now they need a car. There's also a stimulus for instant asset write-off. So if you made money pre-March, before the shutdowns kicked in, you needed to spend it. Now that's been extended into next year, and we saw that increase the demand for LCV. So pickups, if you're in the ute business, you did exceptionally well and are still doing well. And the luxury car business, for anyone who made money, got an instant asset write-off for last financial year. So that kicked in and made sense. And it's still in there now. Stimulus and also the lack of restrictions for COVID around building, builders have still been building, and trades are still generating income. So they've not been impacted. So there's still LCV demand. And used car demand is up, and supply is constrained, because if you think back to the podcast that we had with Steve Short, the rental market had to destock all their cars a while back now because planes weren't flying. If planes don't fly, rent-a-cars aren't required at airports. However, you still need rent-a-cars around the suburbs in franchises. But there's not going to be a lot of rent-a-cars coming back in like we're used to every year in waves when they get defleeted and refleeted. So the rent-a-car market have not been buying up a lot of cars. They have been buying some, but not to the extent that they normally would. So used car demand is up, especially that sub $10,000 market. And as soon as you do that, it then walks up each division after that. And medium pickups and LCVs are in huge demand, as are SUVs. Another thing that happened is you had closed factories when COVID hit in the first wave in March, April. The factories closed, therefore supply was constrained for a couple of months. Then supply started turning up in July, August, but we ran out of cars after the peak selling period. But then they still haven't really caught up, so we don't have the high inventory levels in the compounds going forward like we had up until March this year. So we're really running hand to mouth from a supply perspective. And when demand exceeds supply, prices go up. The other thing is the Euro factories close in August for their summer holidays. And you're also going to get a challenge where the other overseas markets will supply their local markets first before they supply long-term export markets. And as you lead up to the end of the year, most countries operate on a calendar year for a financial year perspective. Japanese are separate. They have a March end of financial year, but all other countries work on a calendar year. So you're not going to get much inventory here before the end of the year. And the closure of Holden totally and their withdrawal from the market has taken away a lot of that discounting pressure. So supply once again has gone and that demand has kicked. And a lot of the Holden dealers have already pivoted and have filled their showrooms with other stock and other brands so that there's less competition for this demand that's now continued to kick back in. So, John, with that as the situation of COVID, what we're keen to cover off now is where do we go to from here? But your thoughts on that, on the COVID effect and the impacts?
Yeah, definitely, Mark. I think that you're seeing is that there are those supply constraints coming through. That's going to definitely have an impact. We're also seeing the used car prices going up. So that's positive for dealers. And not having the high stock levels in the dealerships has reduced costs in that. So in those ways, that's helped profitability and the better transactional prices. So that's all good for dealerships short term. So maybe if you can cover now a bit of where to from here and what are the immediate things we're seeing now at the moment, and then we can have a look at a little bit at the future.
Well, absolutely. So the key predictors are, so where to from here, and then what's the action plan with this knowledge? So I'll cover off first the where to from here. So what we're seeing is a two-speed economy. So you have the lower end, which is the casual and the lower paid workers, and also, sadly, the workers that weren't able to work from home, and so their work opportunities were constrained or lost. So that they're either work less hours or not working at all with the closure of their jobs like gyms, retail, with any of the service industries. So those people got impacted significantly. And they're the ones that won't be necessarily running out and buying new cars, but there's an opportunity for used cars with those people. So professionals and public servants, they've actually done well. They haven't been impacted. They've still been able to work from home. So if you could work from home successfully, you had to pivot, get that work from home scenario happening, but you weren't spending as much money on discretionary spend because your retail opportunities were limited, and also your services that you would engage or your overseas travel did not happen. So you've actually got money. They've actually saved money. So sadly, unemployment is up, but there's an upside to that is that there's a relaxation in the lending laws that were introduced post the Banking Royal Commission. So all those challenges, and Philip Mann's talked about this in his podcast with us, that was a big issue with getting customers set on finance, whereas previously they could. Now they can't, but this new relaxation change should improve that. Now, the Reserve Bank's about to drop rates again. So November, the expectation is that the rates will drop they're already at all-time record lows, and they're going to go lower again. So when you think of all the money that's swimming around the economy, you've got record low interest rates, access to super, instant asset write-offs, and savings if you weren't impacted economically by this. You actually didn't spend money. You still generated as much income, if not more busier, and some sectors were busier. So you're in a better position post this than pre this. So sadly, for the downside, if you're a consumer, upside if you're a retailer, is that transaction prices have increased, getting back to supply and demand. So demand is there and is consistent and is increasing in certain categories. Supply is constrained. So there's not a lot of inventory coming into the country, so prices are going up. The dollar is fluctuating around that 70 cents with a drop in rates, expected to drop maybe a little bit, but it's going to sit around that 70 US cent level. Now, the rules of supply and demand are critical. There's going to be shortages of production. The Q2 production issues aren't going to be filled anytime soon. Very few brands have been bold and have stocked up with significant supply because once again, you're living hand to mouth. The key we'll look at here is factories will fill their local markets first before they look after Australia. So if you're a European market or you're a US market, you're going to fill your economies first before you send cars to Australia. And that end of financial year pressure that's coming in for them, end of year is December. They don't want to have a lot of inventory sitting on ships going to a faraway land without the money coming into their coffers. So it's going to be tight supply to the end of the year. And don't forget the August shutdown for the Europeans and also the model changeovers for the Americans. So not a lot of stock coming from those ports. There's more electric cars coming. Christoph DePerner's podcast talked about that, and we're seeing a bit more advertising around electrification, especially in the premium brands. And when you think of who's been impacted, who hasn't, the premium sector is set to have another buoyant run to the finish of this year, where these operatives who haven't been impacted would normally go overseas, but now cashed up and are going to buy something for a local consumption. Building has continued, so demand for LCVs and particularly medium pickups is going to be strong. So supply is the big issue there, and we've seen the new D-Max get launched with rave reviews and really tight supply. So that's a real challenge for the market as far as if they want discounted vehicles, that's not going to happen anytime soon. So supply and demand is going to kick in. No international holidays, which means people are going to be looking for domestic trips. So very limited air travel. So it's going to be more about a motorised self-drive holiday. And the classics kick in: boating, fishing and camping. So caravan sales are through the roof, boat sales are through the roof, motorbike sales are through the roof. It's all about local recreation because we need a break after this year. It's been one hell of a year. So SUVs and LCV demand is up, and it will still be strong all the way through into June next year. And premium vehicle demand, if you're, once again, as I said before, if you're a professional and you haven't been impacted, you've got savings and you're not going overseas, you've been looking at the same house that you've been locked in or stuck, constrained around, you want to spend some money on something, you want to start feeling good again, it's time to upgrade. If you haven't already done so, you will be upgrading and you're not impacted because you have been working from home and most likely continue to work from home to a certain degree. So that's for the haves. For the ones that have missed out, you still need mobility. So used cars, and there's not a lot of supply, used car demand will be strong all the way to June. If you can't afford a new car, you're going to be looking for a good low kilometre used car. Sadly, there's not a lot of short cycling out there at all. The rental car market, they've defleeted and haven't bought as many cars, so there won't be that stock coming in to drive prices down. So used cars will be a premium, still strong demand, but also getting them out of your existing customers is going to be the key.
Yeah, Mark, it's very interesting that what you're saying about the two-tier. Those have really benefited from COVID and those that haven't, and what is going to be the implications of that. And then leading on from that, the whole constraints of supply. So the sectors that those that have will be buying in, that will drive demand, and the supply constraints will impact that sector of the market, and those that haven't will go into the used car sector. So it's going to be quite interesting. What are the implications of this? Maybe as a first starting point, can you talk a bit about what is the impact from a marketing point of view, and what should dealers and OEMs be looking at from a marketing perspective?
Well, definitely and this is the action plan for the next 8 months. So if we're keen to cover off two things. One will be the short term, which is to June next year, which is 2021. And then what are the longer terms? So there's the short and the long cycle that as far as the game plan. And given that, if you're operating just 1 month cycles, an 8 month cycle can be seen to be fairly lengthy. So digital journey's here to stay. That's one thing that really resonated for me. And it was great that we had David Kane, the industry oracle out of the US, give us some insights as to what he has seen with the various states in the US. The US has always been ahead of the Australian market and has always been one that we here looked towards to see what are the trends and innovations over there. And David shared some amazing info in his masterclass with us, with those states that had severe lockdowns versus the ones that didn't, where the customer journey is going and has been. So digital's definitely here to stay. It's and also when we talked to Simon Yanek from Madeira about having that infrastructure and making sure that the whole lot actually aligns. So the holistic digital strategy is very important with your own website, the third-party websites. And Ag Giramondo from Car Sales talked about the third-party website side of things. But having that link between the three is such a critical bit, because you've got your social media site, you've got your website, and you've got your third-party sites. And they all have to align and tell that story. And further, what Carl Winther was saying in his podcast that we have on marketing is that there's that link of that experience should be the same digitally versus when they physically come in and see you. So you've got to have those touch points that all make sense. Now, one thing David Kane did talk about is the whole lead response times. And I know I've been involved with brands that we've looked at 4-hour response times, 2-hour response times. David was very, very resolute about you need to be there within 5 minutes or forget it. You really have to be all over those leads and get them while they're warm. And it was interesting, the faster you responded, the percentage increase or the likelihood of success was exponentially significant versus if you were 3-4 hours, 5 hours, or maybe 24 hours later. It was just don't even bother, was the feedback that they're getting in the US. And we're starting to see that here. And the other one is working your CRM database. Because right now, if you think that supply is going to be constrained, but also you still want to keep your marketing costs to a fairly tight control. So what you're looking at is your CRM database, and what we talked with Steve Zanlungi from Absolute Results, and just really effectively working your CRM database without burning it out, and just having an effective journey and targeting those people who are going to be up for renewal of their vehicle. And the renewal is not 2 years, 3 years. It may be for some customers, but just really working out where that sweet spot is to get them out of their car before they start looking again. Because we know from the data that Ben Sullivan shared with us from Potentiate is that people change cars when there's been a significant life experience change, or this lifestyle circumstances have changed. And this is where what we see with COVID is that, well, if I can't go overseas, I've decided to buy a boat or a caravan, I need something to tow it with. Suddenly towing becomes a very big impact, whereas I may not have cared about it because the vehicle I had was just to get me around to the airport, and then I'd fly out or even get a cab to the airport and not even bother with my car. It didn't matter as much. So these changes are definitely coming into play. So this is where using that CRM database and having a plan with each of these customers as to what is the story that I need to tell and how can I get them out of their car. But the critical piece that Carl did talk about is having a paid, owned and earned marketing flame that is constantly there. Now, you don't have to spend huge amounts of money, but still just have a story that you're telling regularly from a paid perspective, but really focusing on the owned and earned assets, really making sure your website, your signage, anything that you actually, the hard assets that you in direct control of make sense and tell your story, but also your own story, which is where we use the Alexander Korn discussion around how do you have a good PR story around what you do and your engagement and what you stand for, and a really positive affirmation of what you do and how you go about it. So that's just on a marketing side. John, your thoughts?
Yeah, Mark, definitely. I think things are changing with COVID. I think it's that the whole working from home situations, just fast forwarding that whole digital process and the way people deal and prepared to deal online. Some of these things are happening a lot quicker than they used to. It might have taken 3-4 years for some of the digital processes to develop, and people are now doing that immediately. So I think it's really key for dealers to really look at what they're doing and try and get on board a lot quicker. I think that also that what Carl said, I think you make a really good point there on that keeping the marketing flame alive. So not necessarily spending a huge amount of money, but being very careful where you spend and making sure that it's effective, because not all the sectors are going to be booming. So just doing general broad advertising may not work. So it's becoming a lot more targeted at the moment and looking at what stock you have coming in and then focus on those sectors and how you target those sectors. Now, in terms of new cars, Mark, what's your view of new cars and what should dealers and OEMs be looking at from a new car perspective?
Well, it's interesting, John. I mentioned before about supply and demand. Now, I'm not expecting supply to return to pre-COVID levels until June next year. So when you think of, and there's potentially more supply disruption with Europe going back into lockdown and the US potentially going to lockdown should there be a change of president. The upside is there's changes to the financial rules. So low interest rates, easier to get access. So if you've had a job and you've maintained your job through this whole process, you're more likely to go for a higher end and migrate up to higher spec vehicles. So what we'll see is an even stronger or richer mix in new vehicles being purchased, not so much the base entry vehicles, because those with the money will be going for those higher end specs. And it just makes sense to migrate up with using your F&I tools to get customers into a higher spec vehicle. Now, the other side of it is then, so what do you do around that? So really you need to be bold. This is the boldness. We talked about this in episode, I think 1 or 2, where we said take a punt, stock up for May, June. I still feel that's the way to be, and stock up, but also make sure you do as much forward ordering, but forward order the higher end specs. So you want to be in the box seat for this demand that will continue through into the year. You'll have a strong end of year, there'll be a strong start to next year, and it will run all the way up to June, because these people are going to be coming into the market and there'll be constrained supply. So a wise dealer once told me, he who has the stock wins, he or she who has the stock wins. This is definitely the time to do that. And the evidence there when you look at once the lockdown comes out, you just see peak ordering and pent-up demand that's just going to kick through. So supply is going to be the winner there. And this is where the whole sharpening of the F&I offers and the team around migrating people up into the richer mixed vehicle, really just making sure you get those processes. And David Kane talked about that in his masterclass, is just really using that F&I, the tools of F&I, the dollars per week and the other packages around that to really walk the opportunity up into those high spec vehicles that you've just ordered to make it worthwhile for customers to do so. And then the sales resources, making sure you've got enough, training them, giving them flexible working arrangements, because the typical 9 to 5, especially now that the market's been educated to spend more time digitally researching. So the feedback that Ag Giramondo gave us with the 1.4 dealers being visited, that's because they're doing all their work online, engage with them online. David Kane had some great advice around getting customers in once they contacted you online and having a conversation with them. Not just going for the kill for the sale via the online inquiry, but just that whole conversation around who you are, find out more about them, really understand their needs, earn the right to get them to come in, but be conversational in that approach. So that's a critical piece, and just keeping that digital journey simple. But this is where your team needs to really be flexible, because you want them having those conversations at 7:30, 8 o'clock at night. Once dinner's out of the way, they're on their devices, looking at vehicles, engaging. Once you've got that engagement, that connection then is formed, and you've earned the right then to take the path down to visiting the showroom, test drive, sale. And this is where we're seeing that there's been obviously some resources where people have been let go, so costs have been really controlled well, and I think the network's done a fantastic job in doing that. But the downside is that you can be too lean and then you can compromise that customer experience. And this is where even just looking at what you do from a delivery and also sales, you separate that process, but you still have it in a way that it's still a fantastic experience for the customer. And just have, once again, this flexible workforce and what works best, keeping the customer centricity in at all times. Because as per what Ben Sullivan said from the Potentiate discussion, it's the network that provides the great customer experience and meeting what the customer's expectations are, obviously the COVID safety side of things, but just that engagement and really making them feel good and respected as a human being and valued as a customer will continue to reap rewards.
So Mark, some really great points. And I think the one that really resonates me is about stock. You really need to ensure that you've got the right stock, that you're looking well in advance, because there are going to be delays in getting stock in that. So you have to look at both new cars and used cars and make sure that you've got a good supply coming through and exactly how you're doing that. Now, Mark, from a service perspective, what are the top actions that dealers and OEMs can be doing on service?
Well, as you know, John, I'm originally a service guy who migrated across into the sales side of the business, and service is the fundamentals as to what we are as an industry. People buy a car once every 8 years, but they service it every year. So this is where you want to maintain your rightful share of that service business and that relationship with the customer that we talked about before. And service demand is going to be consistent. There will be peaks and troughs because it all comes down to kilometres driven. So we've had lockdowns where people hardly drove their cars. We saw data from some of the oil companies where fuel consumption was down. However, it will be up as more local mobility occurs, so the kilometres driven kick back in. So service marketing campaigns are critical, especially leading into holiday periods. Holiday safety inspection programs are a great idea. Getting people's vehicles in, checking them, and then the potential to promote accessory sales. Things like tow bars, roof racks, storage solutions. For LCVs, lift kits and GVM upgrades. These are all elements that will be needed for all these extra towing and all the other bits and pieces that people have now, the new toys that they've got for their local holidays. So it's a huge accessory opportunity. But the other part is that you need to make sure that you've got enough techs. The industry has been really bad at developing techs. So we've got to skill up and train these techs and make sure that there are enough in the workshops to provide that service. The industry is one that we tend to leak them or lose them. They get better returns doing other work. So this is an area that we just need to make sure that we've got enough of them and we attract and retain the right number of people for that.
Now, Mark, we spoke earlier a little bit about used cars and the need to get used car stock. What are other things that dealers should be doing now on a used car perspective?
Well, used cars, and I love used cars, as you know, John, and we had a great discussion with Brendan Green, re-used cars, and just the trends that kicked in with the pre-May, June rush of 2020, and the used cars have still been very buoyant all the way through this year. So when you look at the numbers, the rent-a-car companies, as per the Steve Short podcast of earlier this year, the rent-a-car market relies on airplanes. Aeroplanes haven't been flying. So what they did, they've defleeted a lot of their vehicles, but they haven't bought as many as what they would normally do. So normally the rent-a-car market is between 50 and 60,000 cars a year here in Australia. And they get onboarded and then defleeted in waves. So what you typically get is a lot of demand for rent-a-cars and people having holidays up until Easter, and then the rent-a-car market dumps a lot of cars, which then drops right at the same time as demand drops. So you drop all these used cars in, and then demand drops away. So what we've seen is demand for used cars, for those reasons we mentioned before. Those that don't have cars or aren't in a position to buy new cars are seeking quality used cars. Well, that's a segment that there's going to be bugger all cars available. And we called it that we're going to run out of stock. And sure enough, there won't be a lot of rent-a-car stock. So that's one element. The other side of it is trade-ins are going to be your main source of stock. And trading in existing customers is going to be a critical piece to get them out of their car. So, and just valuations, this is the link between the used car department, the service department and the new car department are critical. And that's where the absolute results events come into play. Because your service department is where your customers are coming into every day and working your CRM database to see what their kilometres are, valuing their cars and having someone embedded with them to show those customers the opportunity of that new car because their lifestyle circumstances are changing. Upgrade them with their GVM kits if need be, or upgrade them into a car if they're in a position to do so. So that's going to be a great source of used car stock. The other side of it is, and Brendan Green talked about this, is the government side of things from the government auctions. Those prices have been strong, but the government still needs to turn their vehicles over. There's contractual arrangements and set lease terms, so your fleet vehicles are going to be actually a good source. Now, they won't be as cheap as they were 2-3 years ago, but they're still going to be a good source of stock because it's honest stock. A lot of it still has warranty associated with it, and it's good, clean stock that you can turn over. But once again, the price is going to be a little bit heavier for those, but still a great supply avenue. And the other one I was keen to mention is repossessions. That's another area that normally in a recession, you tend to get a spike in repossessions. But what we've got is there's a moratorium on repossessions. So right now the repossessions are fairly low. Now that may increase in April when the moratorium comes off. There's still repossession stock, absolutely, but there may be a little bit more loosening up come April, and that'll be in the premium space more so, but don't discount that the average SUV will be available there as well. So these are some of the issues and opportunities from a used car perspective, but I can see used cars being strong all the way through to June next year. And there's no real reason why, just if I think of supply perspective, why that would be any different.
Used cars are a very important part of the business, and I think that stock and securing stock is going to need to be the focus. I think you make some really good points there on where they can find stock and what dealers should be doing to initiate plans now to make sure they get this stock into place. Now, from a long-term perspective, Bob, are there any trends that you're identifying or seeing at the moment that dealers should be looking at from a long-term point of view?
Oh, absolutely, John. Structural cost, as we know, is the elephant in the room. We tend to action your fixed and variables in the short term, but structural cost is the big bogey in the long term. And facilities, we know real estate has been held up quite strongly. So real estate is a big issue, and there's a whole review of your facilities as far as, do we really need to have X amount of showroom space? I know every brand wants maximum showroom space, but I think you'll find that the brands now are realising that financial viability is the critical piece here, that you need a viable dealer network. And it was interesting when we listened to Mike Whitfield's presentation and also the presentation from John and Johan from South Africa, the former marketing and sales chiefs of Nissan in South Africa, when they talked about the need for a profitable, sustainable network. And if you don't have that, then you don't have a long-term business collectively. So making sure the showroom facility makes sense, and there'll be some understanding around that. Some brands still want Taj Mahals, but I think there's a realisation there for the second and third tier brands that is not necessarily a great thing if you want to have a long-term sustainability. Service facility locations, given that in a metro can be very, very, very expensive. So having a location that makes sense for your customers. And even where do you keep your vehicles for test drive, and how do you go about test drives? It is bringing the vehicles to the customer. And car sales did a great job early days of pandemic, where they provided the pivoters to bring the car to you services, and a lot of dealers pivoted with that and did a great job of that. So is that something that is then embedded into the long-term game plan, so that frees up some of the resource around facility and real estate and space? So you still provide a good customer solution, but you're not tying up space and cost in space.
Yeah, Mark, I think it's a really good point. I think dealers need to be looking at the long-term viability of their business, and can they relocate certain sectors of the business onto a lower cost site? Because at the moment they might have their service and showroom on a very high cost retail precinct, and can they maybe move the service and the test drive facility into maybe an industrial area close by? So it's what can be done there, and how can they bring down those costs? And these are, sometimes you've got a lease or still 7 years outstanding in a lease, or 10 years in it, but it's to start thinking about that, because these are things you can't do overnight. And you have to start looking at it now so that you have a plan in place so that when your lease does come up, maybe in 5 years or 7 years, you know exactly how you're going to deal with it and what impact that's going to have on your business. So you need to run various types of scenarios and budget saying, well, if that happens, this is what will be the impact. And then run those scenarios through your business with your accountant or your finance guy to see what implications it's having on the business.
Oh, absolutely. And as per Philip Mance's podcast, and that was a really good one for any dealer to listen to, how to managing the balancing of multi-franchise requirements, even having that franchise review. Where are you going to put your focus and energy? Because there's going to be lots of opportunities coming in. Christophe de Perna talked about some of the other brands that are waiting to come into this country. So there's going to be an increase there with some, or a change, if you like, of changing of the guard with some of the franchises, because every franchise goes through a cycle. You'll be on a winner from a product life cycle perspective, and then you'll have your leaner years. And it's just having that coverage for when your various brands are in their cycles of being up or down. So, and Philip did a really good job of covering that off as how he goes about it and reviews how each one is operating and where the focus is put. The other one is staff retention programs. And this is whether it be mechanics I talked about before or whether it be salespeople, this is where, and Philip talked about it, how he goes about it with attracting and retaining his staff. Have been there for 20 plus years. So if you think of the life cycle of an owner and the engagement of an owner and the trust cycle of an owner, if they've bought a vehicle 8 years ago and the same person is there 8 years later to speak to, straight away there's a high level of comfort that they will do business again. Nothing worse than if you buy something 2 years ago and then you go into maybe inquire about a second or maybe an upgrade, even if you're upgrading fairly quickly, but you've got a different group of people there. It doesn't engender that trust, and it's that whole, it gives it the opportunity to look somewhere else because there isn't that obligation to do business. So attracting and retaining is so important of quality people. So then there's all around, and Anton spoke of this in his podcast on basically leading with courage and what the new COVID way of doing business and having to pivot and embracing the technology, but still understanding is that humans are still humans and we still have a need to connect from a human being perspective. So, training, engaging and recognising, and how do you go about recognising, but also being bold as a leader, but also being vulnerable. And that's something, if you study sport, you see some of the great sporting achievements were with teams that actually showed vulnerability, which then show that they're human. And this gets back to the human connection. And Anton did a really good job of explaining that in that how to lead. There's the hard facility thing, but there's the soft skills that you really need to focus on, because ultimately they're the things that are going to deliver your result digitally and also economically. And then just reviewing the processes that each of these people do, given that things are changing, things have changed, and they're going to continue to change. How you go about business, is it still the logical and best way to go about it, or are there better ways from a process perspective? So they're the longer term, but they're a lot of things that you would actually want to be starting to do now with a longer term view. The shorter terms, definitely those other elements around how do you get some used cars into your stock, understanding where the demand's going to be. There still will be demand, supply will be down, so therefore prices are going to be up. And it's actually an exciting time. And I can actually see profitability being some of the best it has been since the GFC. And we saw that from the GFC. Coming out of the GFC, constrained supply and a resurgent in demand with cash coming in drives prices up and actually then feeds on itself, and the economy then kicks back in.
Mark, that's a very good point. So I think also the other thing is your cost structures are being cut and are at the sort of right level. So as you come out of a recession, your cost structure is right, the demand's up, your prices are up, you generally are more profitable as a business as you come out of that. The other important thing I think we should talk about is that complexity, because it's come across in virtually every podcast we speak, complexity. And if you can simplify your business, the better it is and the easier it is to manage and run. And that comes back to the number of franchises you have. because if you haven't got the right franchises take up your time and they create complexity in your business. So it's quite important to sometimes you add on different franchises, but to sit back and really look and say, what value is that franchise doing for me, and what benefit am I getting out of it? Because sometimes it's really important to maybe have a luxury brand and a volume brand and another niche brand, or how do they all fit together? Because you don't want two brands that sort of compete against each other. So it's really looking at that and just standing. It's probably maybe a good time now is to stand back a bit and just reflect on your business and say, is everything right? Have I got everything where it needs to be?
Oh, absolutely. And we mentioned this in a couple of podcasts. There's actually two key phrases here. You learn good habits in bad times and bad habits in good times. Well, right now, all the good habits are being revisited and they've been implemented, which is fantastic to see. But the second one that you mentioned is complexity is the enemy. And I think COVID has done one thing. It's given everyone a reset button. So we've been able to press reset and go, right, okay, let's get our costs under control. Let's review where we're at, and do we need to have X, Y, and Z? Holden's done a reset and said, that's right, we're out of here. So that's one brand gone. So that means that the others can reset and say, right, this is where our volume ambition is. And most of them have done it, and they've done a very good job. The upside is that supply is constrained from that reset being pressed. So the government's done a fantastic job in stimulating the economy. It's done a very good job in constraining the virus, so we're not seeing massive viral issues. So then we're getting movement around. And as soon as people start moving, we're ultimately in the mobility business. And that's something we talked about in episode 1, that automotive is about mobility. If you don't need to be mobile, you don't need an automobile. And that's the whole crux of what this industry is. And that's why we're looking at for the future. Another part of the long-term plan is looking at the car subscription side of things. And Desmond Hang gave us some really good information around what that solution looks like, because that is not going to go away. And a mobility solution is a mobility solution. That is what this industry is. We don't just sell cars. People don't buy cars if they don't need them. And that's something that really came out when people weren't able to move anywhere. Your car was in the driveway and you potentially didn't fill it up for a month because there was no need to. Now, holidays, we need mobility. No airplanes, we need mobility. People want to get out and about. But should there be further lockdowns, that's when we need to be prepared then for a drop in demand for mobility.
Yeah, but Mark, I think we've seen some really positive things coming out now. I think in the last couple of days, we've had 0 new COVID in Australia, and I think that's positive. So if we can get through that and don't need to have the lockdown, we might get back to some level of normality pretty quickly, and that will drive demand too. So I think that could be really positive for us. So I look forward to that. So.
Absolutely, John. So in a nutshell, there's a very simple game plan for the short term. I dare say many business operators, whether they be new car dealers, used car dealers, or even service operators, are embracing a lot of those actions. For those that aren't, there's an opportunity to review those. But that would be our advice that we would be providing, and we're happy to provide any further advice. If you want any more information on this or any other information around the automotive industry, John and I are available for further consultation or further information if you need on these elements.
Yeah, thanks very much for listening. If you like what you heard, please follow us on LinkedIn or like us on YouTube. Press the bell below if you want to get notifications each week of our latest podcast. And we look forward to chatting to you next week. Thank you.
Thank you.